Today I'll be going over the model that got me funded with over 7 figures in capital. Right here I'm showing you my new top step that I passed in 3 trades using the silver bullet model. All it takes is proper risk management, proper psychology, and a willingness to learn and to master the model. I'll tell you, if you're able to use this process that I'm showing you right now, you're going to learn how to be profitable over the long run, which is what we're trying to achieve. We're not trying to achieve some simple model that's going to let us win 1 week. We want to win forever. That's how we make consistent results. Without further ado, let's go ahead and get into this video. Today we're talking about delivery and how it applies to our silver bullet model. I'll first be showing you external range liquidity to internal range liquidity and how that functions. So looking over here, we have external liquidity on the outsides, and then we have internal range liquidity on the insides. So if we're delivering from external range liquidity, we're gonna make a low, but we're gonna return to internal range liquidity. That could be in the form of either highs, sweeping highs, or a fair value gap. Once we deliver from that internal range liquidity, we could expect to go to some type of external range liquidity. And then in terms of external, once we have a smart money reversal right here, which would be present through a market structure shift, we would have a return to internal range liquidity right here, either through a sweep or through a return to a fair value gap, which would be considered internal range liquidity. And then we're going to trade back out through our delivery to create a new external range liquidity. So creating a new range. And essentially that would kind of mean this turns into internal range liquidity, but this is just what we're focusing on right now. This is how the market operates, and I'll explain later how this all goes together. So first, I'm going to be showing you what is our weekly analysis that I sent out to the Trading Dojo. So we are looking at this high to be met, and I'll show you some clues that gave me the idea that we might be going up here. So looking at these volume voids, I'm going to go back to, we could only see Friday. So looking at last week's Friday or the prior week, you could see the delivery. So this is what it is. We have this open. Yes, we trade down, we rebalance it, and then you could see the respect of it through that close. So that's what delivery is. When we have a PD array and we show a clear willingness to want to respect it, or in some cases disrespect it. Right now we're technically respecting it, and then later on in the week you'll see how we trade up here and we deliver through it as well. Now let me break down the lower time frame. So what does Monday look like? So we came down, we swept these lows, right? This was Sunday's lows. This is Monday open right here around New York AM session. So we're going from internal range liquidity. You can see we're delivering off of this weekly volume imbalance, and you could see how well we react to that. So we're not going to be trading Monday because we don't have red folder that week. However, we will be focusing on Tuesday, Wednesday, Thursday. So once we have that internal range liquidity, we're going to be looking at what is our next external. Well, this is our next external range liquidity, and it's going to be this constant cycle. So once we make that new external range liquidity, which would be right here, we're going to trade back down into internal range liquidity, which is this low sweeping right here. And it's just going to be this constant motion. And the reason why that's important is because if we're looking at Tuesday, we have this external range liquidity up here defined by this high. You could see that we come down and we take internal range liquidity. So if this is our internal range liquidity, this is our delivery. We've already mapped out that the week is bullish, and you could see from this respect and all the other things I mentioned, okay, well, we're bullish, we're sweeping internal range liquidity, we're going to be targeting external range liquidity. Okay, well, where can we find an entry in here? Okay, so let me go kind of deeper into this. So on this day, we had 8:30 news. Some things that kind of poke out to me is we have this inversion fair value gap. Something to mention is, even though we're not trading necessarily this time because it's from right here from the low to 8:30, it's 7 to 8:30. But now that we know our manipulation has already occurred within this time frame, we're just going to expect continued expansion. So this is what it looks like. Let me bring up my kill zones. So if we're coming down, we swept London, we swept most of Asia. We're creating a power of 3 by trading down below this true day open. And we're coming up, we have this IFEG. We're showing a clear willingness to want to accumulate, manipulate, and then distribute. If we have all of these things together, why is price going to want to go lower? Why are you going to be bearish? If we have all of these bullish signs, we already manipulated down here. We accumulated, manipulated, and we're distributing through that news. So by the time we're at 10, you know, I see a lot of people, they get like scared to want to enter, or they're unsure, and you got to just stick with your bias. So this is a fair value gap. Okay, let's look deeper and see what kind of entries we have in here. Okay, so that was our 5-minute fair value gap. Now we're kind of looking at our delivery right here. Okay, well, if we're kind of coming in here, it's kind of a mess. We're going to see what kind of move can we get out of this. Okay. Well, you can see we come down, we sweep this, we have this delivery. So we're coming off of external range liquidity because we took out these lows. So this is our external. We come back up. We come back into internal, which is going to be defined by this fair value gap. And then we're going to be targeting that external range liquidity. So with everything we described, we're trading down into, this is a lower time frame external range liquidity defined by these lows. However, we're also continuing that higher time frame trend, essentially that order flow through the 5-minute. So once we have that sweep, we show a willingness to want to trade up higher. We create this little fair value gap in here. That's our entry. And I know I haven't really talked about entries in this series, but kind of completing everything together, you know, from our delivery, from external to internal to external out here. That's going to be our delivery. So that's what I mean. We could have delivery from our higher time frame bias. We come down to the 15 to the 5-minute. We have our lower time frame delivery, which is more of a confirmation. And then we're going to have our lower time frame, which is essentially we're looking at external to internal to external and how we're going to deliver off of a 1 to 5-minute fair value gap, which is our entry. So now looking at Wednesday, Let me get out of this. Now looking at Wednesday, we're going to be focusing on this week, daily volume imbalance right here. So we traded up, we traded through it. We show a clear willingness to deliver outside of it. So once we trade above this, most likely we're going to trade up to this high. Well, why? Well, if we're trading up above this and we close above it, we're showing this, technically respect of what would be this volume void. Once we trade down into it, we're most likely going to deliver higher into what is a vulnerable high. We have nothing to hold us lower. We're already trading into this order block right here. It's probably not going to hold us down. This is the only inefficiency. Well, if that's the only inefficiency, then chances are we're going to trade up to this high, right? Okay, dropping down to a lower time frame. Let me go to a 5-minute. So here is our silver bullet time. So focusing in on that time, say we let all of this price develop, right? Okay, well, what happened here? We swept this high, which is a data high. This was from 8:30 news right here. And then we sweep this low. So typically those are draws on liquidity we like to target, which is a data high or a data low. When we have these long wicks right at the open of that news, which right here is 8:30. Now that we don't have to worry about that, okay, let's focus on what do we have on the chart now. Well, we're trading down into this daily time frame volume void. Okay, well, we come down, we sweep. We have a bit of a market structure shift in the form of this breaker right here. We also close cleanly above these highs, but mostly this breaker is our confirmation right here. And then we have some lower time frame fair value gaps, but I'm not really going to mention them. This is one of them. We have quite a few more on the lower time frame. However, we're just trying to focus on this bias and our delivery. So our delivery coming off of this daily volume void, we swept this data low. Okay, well, what's left? What's left after we sweep this low? Well, we swept all of these lows too. Okay, so what's left? This high, that's all that's left. These highs. Okay, so once we have that market structure shift, we could look for a entry off of any fair value gap within this leg. Okay, and remember our delivery, we're coming off of external range liquidity. We're coming up, we're creating internal range liquidity right here. And then we're going back out to external. That's our delivery. Just combining all of those things. And then finally, I'll look at Thursday. So you can see right here, let me pop up our kill zones. We come down, we sweep after London, we swept all of Asia, all of London. So from this candle right here, what's left? Well, we just have these highs, all of these failure swings right here. Okay, 8:30 news takes those out. That's okay, because during this whole time we accumulated, we manipulated, and then we distributed. So the same exact setup we had on Tuesday, we're gonna look for a continuation off of that news. Okay, what's our first sign of delivery? We have this, that fair value gap. So inside of here, once we hit our 10 o'clock, let me go back. Once we hit 10, could drop to a lower time frame. And we're just looking for a fair value gap in here. You can see we have a market structure shift right here. Remember, we're trading up into the weekly high. So we're just looking for a continuation order flow. Okay, we have our first fair value gap right there. I did not catch it necessarily, but right here, this would be our entry. Could actually have a wider stop loss. Pretend that that's our entry. Okay, so that was our entry. We did not get stopped out almost. I remember on this day I had quite a bit of a larger stop loss. It was around down here, but that was actually my entry. And as long as we're following the higher time frame bias, entry is one of the least important things. We just need to be on side, which is looking at the daily, where are we drawing up to, looking at our delivery, what imbalances are we delivering from, and then we could just, with all those clues, we are simply looking for a market structure shift and then a fair value gap, which was right there. And you can see we have quite a few more opportunities. You could have gone in on this leg right here, any of these legs with our fair value gap, and it just continued higher all day. So I'm pretty much going to end it there. We do kind of trade up higher on Friday, but I'm not really going to get too deep into that. Those were the main days that we took trades, and you could see there was clear opportunities. We're just looking for essentially what is AMD, accumulation, manipulation, and then we're entering on distribution, which typically happens during our silver bullet time, which is where we execute on a 1 to 5 minute fair value gap. If you guys like the video, make sure to subscribe, and I'll leave the Discord link, the WAP link, everything down there if you want to check it out. Thank you.